Now let us go ahead and take on the last example on this chapter, cost of capital. Now let us go through this question. Yes, ma.
RAM Limited evaluates all its capital projects using discounting rate of 16%.
You know what is that? That is to calculate something called the net present value of their investment in, let us say, some machinery or some factory building, whatever project they have on hand. They use a discount rate of 16%. You know why? Because 16% will be the cost of funding the project, or also known as cost of capital. Nothing but the weighted average cost of capital. Is that fine? Therefore, remember 16% is supposed to be the WACC. That is why that is a rate used for discounting all the future cash flows to present value. By now you should know what is present value because we have done some present value technique, right?
Yes.
You find the present value of all your future cash flow from the project minus the initial outlay will give you something called the net present value of the project. Remember, the present value of all your harvest minus your initial investment equals the net present value. Got it?
Yes, sir.
So indirectly they given that 16% is supposed to be the WACC given to you. Next.
Its capital structure consists of equity share capital,
Equity share capital,
retained
then
earnings,
retained earnings,
bank
bank
term
term loan,
and debentures redeemable at par.
and debentures that are redeemable at par.
Rate of interest on bank term loan is 1.4 times that of debenture.
So suppose the rate of interest on debenture is X%. Then what is the rate of interest on bank loan? It will be 1.4 times X, 1.4X.
Remaining tenure of debenture and bank loan is 4 years and 6 years respectively.
It is 6 years and
4 years
and
6 years.
4 years, right?
Yes.
So bank loan another 4 years to go. It doesn't matter because it has no issued at a discount.
Bank loan is 6 years and debenture
Bank
is
loan
4
6 years. I'm sorry. Bank loan 6 years and debenture.
4 years.
Okay, 4 years. That matters, right? N 4 years. Next.
Book value of equity share capital, retained earnings and bank loan is rupees 20 lakh, 30 lakh and 20 lakh.
So 20 lakh, 30 lakh and
20 lakh.
20 lakh bank loan. Next.
Debentures which are having book value of 30 lakh
Book value 30 lakh rupees.
are currently trading at rupees 98 per debenture.
Currently trading at rupees 98. That means you have to assume the net proceeds to be 98. And don't assume 100 because when you offer new debentures 100, nobody is going to buy that, right?
Yes, sir.
So 98 will be taken as net proceeds subject to any flotation cost. Next.
The ongoing PE multiple for the shares of the company stands at 4.
So what's a price earnings multiple 4? What is the meaning, sir? What is the meaning of price multiple 4? Market price per share. We have done this earlier. Market price per share divided by earnings per share. Let us say the market price is rupees, say, give me some number.
20.
Oh dear. So market price, let us say rupees 200. I'll add 10, right, Lakshita?
Yes, sir.
With your permission. 200 rupee market price. Let us say the earnings per share is rupees 50. Now what is the price earnings ratio?
4.
It is 200 divided by 50 rupees. That means shares are trading at 4 times their earnings. Yes or no?
Yes.
It is 4 times PE ratio. You know, I can do even the ulta of this. If I put 50 rupees on top, earnings per share, divided by, what is the market price? Rupees 200, 50 upon 200 into 100, how much I get? I get how much? So 50 divided by 200 into 100, how much you get?
2.5.
You get 25%. I don't know how people can go so wrong.
25%.
It is 50 rupees upon 200 rupees into 100, how much? 25% is what? You know, that is one way to find the cost of equity. So far, we haven't used that formula. Please refer to your notebook. Don't display that on the screen. Turn the page. Go to the first class of this chapter. Can you turn the page and refer to, or is there some other notebook? Mayur? Same notebook. Just turn the page. Now tell me, what are the equations you have taken under cost of equity?
Earnings price up.
Earnings price approach. Now we have nothing but the earnings per share on top, the numerator, upon the price per share, the market price, into 100 will give you cost of equity. And here I cannot use any other formula because they haven't given the dividend, they haven't given the RF and market risk premium or beta. I cannot use any other formula except this formula for cost of equity, which is EP, earnings price approach. Is that clear?
Yes, sir.
Now there is another way to get 25% directly. When they say multiple is 4 times, you know what you can do? 1 divided by 4, reciprocal. Because when you divide 1 by market price by EPS, what happens? It becomes EPS by market price. Tell me, what is 1 divided by 4? 0.25 or 25% is the cost of equity. You know that? Think about this. 1 in the numerator divided by P by E. What happens? It becomes E by P. When you divide 1 by P multiple, you will end up with E by P, which is a formula for finding out the cost of equity under earnings price approach. Is that clear, guys?
Yes, sir.
Yes or no?
Yes, sir.
Okay. Then next.
You are required to 1. Calculate the rate of interest on bank loan.
Calculate the rate of interest on bank loan.
2. Calculate the rate of interest on debentures.
Interest on debentures.
Tax rate applicable is 30%.
Tax rate is 30% given. And that is a question. Now let us go ahead and take on the solution. Yes. Go ahead, ma, read. What is going first?
Working note. Let the rate of interest on debenture be X.
Let the rate of interest on debenture, that is going to be X% on face value, let us say, face value given, right? I think the debentures are trading at rupees 98, face value how much? 100 rupees, right? If in case I haven't given that explicitly, you can assume 100 because they're trading at 98. But have they given rupees 100 per debenture?
No, sir.
Not given, you can assume that because the debentures are trading at rupees 98 in the market, right? So 100 face value on that X%. And what is the rate of interest on bank loan? It is 1.4 times X. Yes, ma.
KD on debenture is equal to
They written the formula I into 1 minus T plus RV minus NP by N, the whole thing by RV plus NP by 2. Now check this. What is the rate of interest X% on rupees 100 face value? It will be 100x will be the amount of interest, right? And that into 1 minus 0.3 plus RV 100 minus 98 divided by 4 years, the whole divided by 100 plus 98 by 2. Now I solve this, I get one, one clumsy equation, right? How much you get, ma?
70x plus 0.5 by
0.5 divided by
99.
that is a cost of debentures. Sir, what about term loan? Should I use the same formula, interest into 1 minus T plus RV, because redeemable? It doesn't matter because the RV and NP will be the same. You get it?
Yes, sir.
Because there is no issue at discount, nothing. So it's going to be 100 minus 100 by 6 years divided by denominator again 100 plus 100 by 2. It's going to be 100, right? So what you can do straight away, you can use that shortcut formula. What is that? For a term loan only, what is the cost of term loan? Rate of interest into 1 minus t. Now what is the rate of interest on bank loan? 1.4x. Because x%, so that is the rate on debenture. Bank loan 1.4 times, so 1.4x into 1 minus 0.3. Now when I solve I get 0.98x. Is that fine?
Yes, sir.
Now we shall make a, and then therefore the cost of equity,
Yes, sir.
1 divided by 4, which is 0.25 in decimal format, or 25% is the cost of equity. And that will be the cost of retained earnings as well, right?
Yes, sir.
Yes, ma.
Computation of WACC.
Now they made a nice table, right? First column, capital, the source, equity, retained earnings, then
Debenture.
debentures and bank loan. Amounts are rupees 20 lakh,
30 lakh.
30 lakh,
30 lakh.
30 lakh,
20 lakh.
and then total
1 crore.
1 crore. Proportion 0.2, 0.3, 0.3 and 0.2. And the cost 25% or written 0.25.
0.25.
Where you in decimal format, no problem. So 0.25, I'll go with the solution. Okay, 0.25 again 0.25 KD, whatever you got the equation, and then bank loan 0.98x. Then last column, multiply these two and find the WACC. So what is 0.25 into 0.2?
0.05.
Very good. Do that for all the numbers. And the total of that should be how much? We know 0.16 or 16% WACC given in the question. Yes or no?
Yes, sir.
That's what they written now. Plus E equals 0.16. Now when you solve x, how much you get? X works out 8.2%. And what will be the bank loan? It is 1.4 times 8.2. How much you get?
11.48.
And that is a cost of, that is a rate of interest on term loan. Is that fine?
Yes, sir.
Now guys, go ahead and solve this sum, including the equation given out there. Any difficulty, let me know. Okay? Fine?
Yes, sir.
Pause.